Well, as Nicole mentioned, the Dow up over 200 points, now getting a big boost from that last-minute fiscal cliff deal. Jim Frischling of NewOak Capital joins us now with his thoughts on how long this relief rally will last. And can I quote to you real quick? Cheryl got hold of a note from JPMorgan Chase, and they said, quote, a resolution which imposes considerable near-term headwinds to growth while doing very little to address longer-run fiscal sustainability issues. In English, taxes go up, we get revenue. But the real issues haven't been solved, and I would imagine investors would be nervous about that.
I think that's exactly right. I think what got done was the bare minimum. I think a lot of people have been expecting it, some kind of deal, some side of at least compromise to be reached. But really, it's completely insufficient to the overall needs and things that do need to be addressed. Most definitely spending. So
this rally we're watching right now seems to be a little bit overreaction to that which they should not be reacting. I mean, this is very near term what they're doing today.
I mean, look, there was some cleanup at the end of the year. I think people were concerned about dividend and capital gains. Taxes going higher than they did. I think the estate tax came in a little better than people had expected. There were a lot of things that, let's say, were a better deal in terms of taxes and threats to investments than actually than could have happened. But on the other side, without any addressing of the spending cuts, that issue is very much on the table, and it's going to rear its head over the next 6 to 8 weeks.
You have been talking for the last couple of months. You've been coming on the show talking about the fact that you expected a mini deal by the end of the year, that last-minute deal. You and I disagreed a couple of times about it. In a way, though, you got more of a grand deal than even you predicted. Is that a piece of the rally you think that we're seeing today?
I do. Again, I do think on the tax side, it was, you're looking at the rally, it was more favorable to the equity markets and to a risk-on environment than I think people had expected. It's not a $200,000, $250,000. It's up to $450,000. It's not the estate tax starts at $5 million for individuals and $10 billion for families. And again, the dividend and capital gains, a material, I think, far less than it could have been, or lower than it could have been.
But economists on both sides of the political spectrum are saying we're going to lose 1% off GDP. You got the PMI readings in Europe, which are no good. Ours was pretty good. But at what point do you look at this and say, I have to get out of this now because long-term is not looking good?
This afternoon? I am concerned that the debt ceiling issue is going to take really control of this market. And memories from 2011 of just how dysfunctional it was caused the market to fall somewhere between 15 to 20%. And even after the bill was struck, we still got the S&P downgrade, and we still had a very difficult market. So President Obama doesn't want to negotiate these points. The fact is that's exactly what's about to happen.
But at the same time, we had some bright spots in the 2012 market and the economy, and housing was one of the biggest. Technology, the second biggest. Those were the best sector performances that we saw for 2012. So if we stay in that group for 2013, maybe that's the way to kind of avoid the disaster that is Washington and the debt ceiling debate, which we're about to get into.
No, it's a great point. Housing has been one of the rocks, and again, it is only second to jobs, which is what people are looking for, but housing is such a benefit in terms of just people feeling better about things if their home is not plummeting, in fact, is appreciating in value. So I do think there's a lot of good things, and we've been constructive on the markets, but I do think that we are going to see a fairly dysfunctional Washington continue. I think the markets are getting somewhat numb to it, expecting that ultimately a deal does get reached. But again, I do think the House GOP has seen better deals, whether it was a couple years ago or even a couple of weeks ago, than they actually just cut. And since they cut it, my expectation is they are preparing for a fairly, I guess, contentious January, and starting right now.
We're going to ask a couple of those members right now. Jim Frischling. Thank you, Jim.
Thank you.
Good to see you. Happy New Year, sir.
Happy New Year. Nice to meet you.